Today, I had the great time interviewing a preferred lender that I use. His name is Brett. He's a private money lender from Crebid, and he is amazing. He talks about all the things, the good and the bad for fix and flips, the type of loans that they love to do. Thank you again. Listen, and I hope you get something out of this episode. Thanks. I'm with Brett Fair, not to be confused with Brett Favre, but
legend.
He is still a legend. Even Brett Fair is a legend in my world because we got a deal done that I don't know if it would have got done.
I appreciate it. Yeah, we did. We started off hot.
So Brett is with Crebid, and he is one of my preferred lenders to use every time I have a fix and flip or construction. Or what other products do you guys use or can promote?
Ground up construction, any kind of refi, cash out, DSCR. So we can do short term or long term.
Nice. What do you think is your bread and butter? I know we're gonna get into this, but I just wonder what your bread and butter is.
The bread and butter is definitely the fix and flip, purchase or refi. That's 70% of our portfolio right there.
Nice. And you guys keep everything in-house, or do you sell them out?
Everything in-house. We do sell the loan. We have a capital partner, Barings Capital. They're out of North Carolina. They buy all of our paper. They set the box that we got to fit our lending guides in, and they buy everything. But we service everything on the back end in-house. So, you're married to us for at least a year.
I love it. Well, tell me a little bit about yourself. How did you get into lending? You're an account executive. How did you even start into the business? How did you get started?
Most unconventional way you could imagine. So take it a little far back in my history. My family has been in the title business in Dallas since the 40s, I believe, through a couple of different names, Hexter Fair, Fair Texas Title. So I've always been kind of a part of the real estate, whether it's commercial or residential world, through that. But my career after that has been all sales. I have been a freight broker for the past 5 years, and that is something most people don't even know what it means. So
yeah,
basically how that went was most of these shipping companies, whether it's Amazon, Bass Pro Shops, Walmart, they own a few of their own trucks, but they third party out most of their shipments. There's so much commodities going across the road every single day that no one has enough trucks to handle it themselves. So brokers fill in. I worked with Bass Pro Shops. That was my best customer. And I moved boat parts. I moved hunting gear, fishing lures, whatever you name it. I have moved it across the country. So sales has been my background. And I had a close family friend that is now part of the ownership of Crebid. Originally, we were Wildcat Lending. That started in 2011. And this whole kind of hard money lending thing really kicked off after the 08 kind of real estate crash. This whole side really, I'm sure if you know anything about that or were affected by the 08, there was this change up in how lending structure needed to happen. And so there was a void for hard money. And that's where kind of our founders came in. And then this past year, it was June of 2025 was when Crebid was formed. We got linked with Barings Capital. They gave us, $500 million to do as many loans as we can for a year.
Wow.
And then once that number gets eaten up, they're going to double it for 2027 and 28. So we got a pretty good war chest going. Yeah, absolutely. So I joined in June or August of last year. And so for the past year have switched commodities, but sales, you got to be able to talk. You got to be able to communicate with people and you got to be able to meet their needs. The terminology just changed for me.
Yeah. Well, I mean, going off of it's not only you're selling to me, the broker, but the borrower, and then you had to sell your manager too, right? There's a couple times where we were
100%.
Sales is sales, no matter where it's either up, down, lateral, whatever it is. We needed you. You came in clutch, so I appreciate that.
Absolutely, yeah. Sometimes the loan officer position, you're kind of on an island, and you're the only one believing in the deal. The borrower may be upset. It's you and the broker together, or the broker's upset with you and the underwriter doesn't like the deal, and you got to get everyone on board. So this happened many a time.
Yeah. And the deal that we were working, there was, in the last hour, we had a few appraisals come in. Some were right on par, some were a little low, and it's which one are we using, or a combination or whatever. And, we we came in, I think, 100,000 short of what we needed.
Yep.
And I had to tell the news to the borrower, like, hey, look, this is where we are. Like, are you okay with it? And he's, oh, whatever. She was,
Right.
screaming on her end. And, I came back to you and you helped me get this thing to the finish line with $100,000 swing. So you're a salesman. You're the best salesman I
Absolutely.
know right now.
Well, hey, I appreciate it. Well, I was basically and sometimes this works with wholesalers too, when you have those involved with the deal.
Yeah.
Or do you guys want to do this deal, or do you want to make no money at all? There's a way to negotiate it. There's a way to make it happen. And sometimes you got to give and take a little bit, but either it's you're getting this deal done or everybody's out $0. So we got to find a way to make this work. So
yeah. Now let me ask you this from an investor side of things, right? Like you're seeing, I don't know how many deals that come across your desk, a month, but what are you seeing, like, as far as, investors are struggling with when it comes to financing? Like if they were going to put something together, like what do you see as like a common theme or a couple common themes that you see that investors struggle with?
absolutely. I think as of right now, and there's kind of been a little bit of a shift in the market, but the valuation, everyone thinks that the best deal that they've ever seen. It's the hottest deal going. This one is a winner 100%, especially on the investor side. And not to discredit them, but sometimes you got to get realistic at what your comps are and what your market's going to give you. So many times we've looked at one and they've been adamant about that valuation being at $1.9 million. This is what this house is going to sell for. And you look at one 2 doors down that has been on the market for 118 days. And you got to say, I'm sorry, man. Sometimes this market's going to speak for itself, and that we got to get more realistic on the values. And that's not a knock on the deal at all. It's just let's negotiate a price that's a little lower. Let's adjust the rehab budget that you're going to put into it. Opposed to $600,000 of rehab, you can knock some of that stuff down. Don't put in the brand new, appliances here. Let's go more modern tech and let's drop this down and make this work where the numbers fit your budget. So I've seen that a lot. And especially for the new investor, it's understanding the whole scope of the project. Sometimes they're hung up on interest rate, or they're hung up on cash to close. And you got to think about, okay, the main goal is you're going to either refinance this or you're going to sell it at the end of the day. So what is the best way to structure this to get the max profit out at the end? Or where are you going to see the rents at after you do this refinance? That's kind of where you need to move their mindset to sometimes. And it's hard to get that brand new borrower across from that. And they're just seeing right now, what is this cash to close? What is this interest rate? And opposed to their end goal. It's really coming down to the end goal sometimes.
Yeah, and I appreciate that because, when we were working the deal ourselves, there was, coming at it from a different approach, like you said, like, hey, look, what is this, have you considered this piece of it or that piece of it? And, how do you have this whole like sheet that fill out, right? So it's like, what is the phases, or where's the money all going to? And maybe there's ways to cut corners in certain areas. And
absolutely,
I think with a lot of investors that, especially if they're newer, right? They want the nicest stuff. It's like, I was speaking with someone the other day and I was just telling them like, what is the end goal of this, right? Is because you have to think about, you want nice stuff in there, but there's a price point that comes with all of that, but also not thinking like, okay, you're going to rent this out right now, but eventually sometime down the line, you're going to have to resell this too. So,
absolutely.
What does that look like? Who's going to be the next buyer for that? And they kind of, got to think of those things as well. So I appreciate about you giving us different angles for us to think about. So that's cool. Is there a specific deal recently that you found that was, a little bit tougher, especially from the start, or, some challenges came about it? And, tell me a little bit about that and like how you approached it, maybe from a different angle and got it done. If you can give
absolutely
us some specific.
I have one very recent that's actually funding today. It's in Salt Lake City, Utah. We, just from the start, broker approached me beginning of July, uploaded the file in the beginning of July. We had no docs. It took until basically August 2nd to get all these docs in. So right off the bat, the borrower is unresponsive. Is this deal going to happen? Am I going to, I kept getting asked, by higher ups, because if a file sits too long, they're like, why is this here? Are you wasting your time? What's going on? I was getting questions from above, asking about it. I'm peppering the broker. I'm like, hey, man, if you want to close this by the end of the month, we got to get this going. And finally, we got the ball going. They were able to, focus on the deal, the borrower was. And from the start, they had purchased the property in January. And I was a little worried about the as-is value. It was a refinance. And when you're doing a refinance and you're trying to get all the equity you can to cover your closing costs, that as-is value is your key right there. That's the linchpin on whether you're going to bring cash to close or everything's covered in the loan. So they had done rehab to it. Even though they'd spent $80,000 to it, mainly what they had done was prepping for the new add-ons they were doing, gutting the property. So that house they bought in January, from the work, even though they put that equity into it, it had been devalued. What they bought it for and what they could sell it for today with just a shell of a house with construction all around it isn't going to be the same number. So huge challenge with that one. So we got the appraisal back. It gave a great ARV because their plans were solid, but that as-is value dropped from what they put into it, $120,000. So he was going to have to come up to close. I initially quoted him like you're going to put $10,000 into it out of your own pocket. And after the evaluation, he was going to put over $60,000 to it. And he was livid. And I said, look, all right, let me talk to this appraiser. Let's see where this value came from. Maybe there's a higher comp that he wasn't looking at. So very nicely, I called the appraiser and I said, thank you for getting this back to us so quick. 9 times out of 10, you're waiting on the appraisal. It takes 2 to 3 weeks. This guy knocked it out extremely fast. So I was very appreciative of that. Just asked him, I was like, how did you get this evaluation? Where did this lot value come from? There's still a house sitting there. And he's like, it's just a shell. Like, I only gave him the value of the lot. And so I was like, thank you. I really appreciate you. Ended the call. I sent him 2 comps for like, here's a lot that sold for twice what you're giving him 2 doors down. Here's a lot over here that sold for, 3 times more. We got to look at this. So he sent an ROV in. The appraisal came back higher than what he paid for it. I think I was maybe a little nice, and it was a nice approach that may have won us the deal. But now he's bringing nothing to close. Borrower's happy, and we're signing the docs today. So sometimes you just got to get creative. You get hit with something that is a slow burn. Maybe this deal will happen, maybe it won't, but that was one we stuck with and we got it to the signing table.
So you said 2 important things there. The first one was we were a team, right? We're 100%. A team. And if we got to get our hands dirty, you said, look, I'm going to go find you some comps so that we can justify this deal, get the appraisal where it needs to be. Like, I love it. And then the other thing, because we're a team, right? So you're working for, like, let's say the broker or the borrower at that point, but the borrower is a team with us too. Absolutely. And, one thing that, we had some trouble in the beginning of our deal is like, listen, borrower, you have to be responsive. You have to give us the docs we need. You want this thing to close in, yesterday. Right. But we're still waiting on you to fill out your budget. We're still waiting on this, your
July bank statement.
Yeah, July bank statement. Exactly.
Absolutely.
So, we're a team. I guess the core message there is we are a team and we have to, work together. So if that's you go getting comps so that you could work his deal, but then them getting, be responsive enough so that we could, get things done. If there's one piece of advice that you can give like an investor who's listening, that, because I love the fix and flips too. That's why I got into, being a lender. I wanted to understand the financing. I feel like real estate is going to be the way I retire. Yeah. So, I wanted to understand funding and all this other stuff. And the more deals I'm doing, the confidence I have now to getting things done. So I put in 2 offers in Alabama and I'm in Florida. So it's like, now I own a couple properties too, but I want to get into the fix and flip deal. If there's something, let's say, what is the best way a, borrower can come to the table and, what do they need before they come see us, right? What would you say is like some things that they should have solid? And one of them you said like the ARV, like just make sure the comps are around and you're going to get what you want. But is there anything else that you can think of that says, hey, look, borrower, before you come bring us a deal, let's have these things in order so we can make this deal smooth?
Absolutely. biggest thing that pops out to me is financing. Are you, the way we structure it is, you're 10% into the total cost. They might not know that if we hadn't, conversated or done a deal before, but also you need reserves. You got to show that you are financially capable to afford this loan from the time that you're jumping into it. Although these are short-term loans, 12 months, 6 months, you got to show that you have the reserves to at least make it responsible, that you are making a decent business decision for yourself, your business, and kind of just establish that trust with us as a lender that we don't have to worry about you 3 months down the line ghosting or not showing up for payments or something like that. But the biggest thing, make sure you're ready for that big jump into the investment pool if this is your first one. You've stored up some savings, you got it going, you got a game plan. And the second one, is the property. This is an asset-based world that we work in. It lives based off the value of that property and what you're going to put into it. So I think doing your homework and looking at the comps in the area is so important. I know I touched on that earlier, but it's really understanding the value of it, what your rehab budget is going to add to it. And, sometimes you'll see a house it's a shack and it's leaning over and they're going to put $50,000 into it and sell it for $300,000. You're like, okay, I think we're off a little bit, but
Yeah.
Understand once you have that good piece and that solid asset, that's going to make the deal right there. So.
Now, do you guys work with a lot of first-time investors, or what do you prefer?
Absolutely. So we're first-time friendly. I haven't flipped a house personally. That's kind of next step on my bucket list there. But understanding that, this is your first one, or after doing that first flip, it's not just you've done one flip. Now you have gained over 150% of knowledge on how this game works, how to flip a house, what not to do, yes and no. So that first deal that you do is a huge move. And we want to be part of that first deal for these borrowers. I think it's very important for the first time investors know that this is, a credit score heavy environment. So make sure your credit's solid. Make sure you have that savings where you need it to be. And this isn't something that you're jumping into before you're ready, but first time investor friendly for sure. And honestly love that part of kind of talking them through this business. I haven't done it on my end, but I know the lending side very well. And I'd love to explain every detail of it to those first time ones. Sometimes you're holding hands a little bit too long, but
yeah,
you win a repeat borrower that way is having great customer service and coaching them along the way on how it works on our end. So.
Yeah, it's they call it the hero's journey, right? You are the guide for this hero to get to this area, and then you look like the expert. I mean, you are the expert, but you are the expert, you are the guide, and of course you're gonna go to you again. Why would they go anywhere else? Because you help them.
That's what I'm hoping for. Yeah,
accomplish thing. I tell the first time, investors, and I tell a lot of people this too. I said, at the end of the day, from a lender's perspective, this game is about risk, right? Sure. So you're a little bit more riskier when it comes to a first time home buyer because you don't have the knowledge of something goes wrong or what it looks like when you're finished and the process, or the deal might be risky, right?
Absolutely.
So it's not just your experience, but the deal in a certain area, if there's, is this just a cosmetic rehab or is this a full construction piece? I said, so when there's less risk, I say you get better terms, right?
Absolutely.
At the end of the day, right? And when there's more risk, whether that's your credit, whether that's the deal, whether that's your liquidity, when there's more risk, the deal is not as favorable in your terms. So
right.
And I think when I explain that, that kind of stops, some of the objections I may get, because I can always fall back on that. Why do we have to put so much down? Why is the LTV this? I want more. Or, why are they asking for this? And it's well, at the end of the day, this comes down again, like I said, the risk, and it's just more riskier. And I think people understand that, especially when they think about their own money. Right.
And I think one thing is very common is sometimes those first time investors will try and get into, a small house, low price point, small ARV, in a reasonable little neighborhood, and they think that possibly that is going to limit as much risk as possible. A $70,000 purchase house or a $50,000 purchase house, they're looking at it monetarily, thinking, okay, I'm not really putting that much money into this, and I'm going to limit my risk in that scenario. And I would say typically those homes are the most risky. Even though it's a small purchase price or a small investment, and if it goes bad, you're not going to lose as much. But when you got a house that's a 2-1 and you're purchasing it for $50,000, there's not a lot of room for growth there. I think you got to bump into that next stage of neighborhood or that 3-2 scenario where you're purchasing a house for $200,000. And even though that seems a little bit scarier to a first-time investor than a $50,000 purchase, the spread is so much higher in that kind of price point and group that it minimizes the risk that you think you'd be having if you're buying this, small home at a small price point.
Yeah, I think I see the coin on both sides. Right. So a little bit more risk can also give you a little bit more profit, right? But again, it has to be the right deal.
Right.
So the properties we own, we had to do no work to them. They're a higher cost, so it's less risk. They do cash flow, but I paid a little bit more for it, right?
Yeah.
It's definitely not $50,000. I wish,
yeah.
But if there's, so I guess it's risk threshold is the word I'm going to use for the investor, new investor, old investor, whoever it is. They have a risk threshold, and sometimes they think, like, especially a new investor, like you're saying, like, hey, just because it's a cheaper house, not as much money has to come out of my pocket, I'm willing to lose it. But at the end of the day, it could give a high reward depending on if you found a good deal. Absolutely. But it also could be a little bit more risky because, if it's a $50,000 house, because I'm not only looking at the house itself investing, it's like the neighborhood, right? What happens on the weekends? What happens, at night? Is there traffic? Are you at a busy street? Because at the end of the day, you're fixing and flipping a house, whatever price point it is, someone is going to live there, whether you're selling it or someone is renting it.
Right.
And I think the neighborhood and the surrounding areas of what's happening, especially if there's maybe some type of, industry that's coming there. Because I know so I'm currently in Florida, but in Ohio, they're like all these data centers are popping up, which is like more jobs, and Facebook is coming, Amazon is coming, right? Like all these big companies coming, which is driving our prices up, which is great.
That is, and absolutely right. Yeah.
Yeah. In Columbus, Ohio. So those are things I look at. I'm currently, since I'm in Florida, I'm trying to keep stuff around me. We have, one of our properties is in Ohio.
Yeah.
Now I want to stay closer to where I'm at. I've been looking in Alabama, and I'm liking Alabama. I don't know why. I would just like it, Alabama. So, that's where I'm at. Because when we get into this industry, especially from a new investor, like there's these myths, right? And they're, like you said, some of them are, they're taking a little bit longer to make decisions or whatever's happening. If there is a myth that you can dispel, right? Like, oh man, people think that, maybe credit is one of them, right? It's like, you may not think that your credit is important, but listen, your credit runs this deal. Even if it's closing in an LLC, your personal credit is important. Is there any other myths that you think that you come across where people, they think one thing is true, but it's really the opposite?
Man, God, I would definitely say credit is a big one. The other one is, not to say there's not lenders out there, mostly on the private side, but I think one that's definitely hard to find, and it may be more of a unicorn situation, is you're putting nothing down and you're getting a deal on the back end that's making you a ton of money. I think that's a hard one to find. Maybe ChatGPT or Claude can help you sift out some of the lenders that can pull that off. But really, you got to have equity into it. This is a little bit more of a pay to play scenario than most people think, and I think that's something that once you get in, the experienced guy will understand. And you kind of have to coach someone brand new into this is kind of the whole market right here. So although that's not what you'd sometimes love to hear, but that I think kind of can be a myth a little bit to the first time investor.
Well, I would tell you, it's not just a first-time investor. It's also
Yeah.
people buying their primary residence.
Yeah, 100%.
Like,
100%.
sometimes I'm so floored, when people are like, listen, I want to buy a house. It's $500,000.
Right.
I want to put zero down.
Right.
Like, I want to pay, a quarter of a point of origination. I want the seller to pay all the closing costs, and I
Right.
want a seller concession of 10 grand. It's like, man, I
Yes.
would want that too.
Wouldn't anybody? Absolutely. Find
So
me
I
that
think
deal, please.
Yeah,
Yeah.
right. So I think what you're saying and what I find is very true as well is you got to have realistic expectations of what we're
100%.
getting into.
Right.
And, even though that deal is out there, that 100% financing, 100% rehab, I have a lender out there, but it's very strict. It is not
It is.
easy. It's like, hey, look, I need 10 deals in the past 24 months to be done in that state.
Yep.
And the
800 plus FICO.
800 plus FICO, and
Wow.
and the area cannot be a declining market. And I have a minimum loan amount of 150,000. And there's so many things to that, but
So,
it's, a good deal doesn't make it always the best deal.
so true. So true. So, but yeah, those are hard to find. And I think that kind of may segue into my favorite deal to do, where you kind of achieve that in a roundabout way. But my favorite deal to do is the refinance of a ground up construction. Whether you own the lot or there's a house on the lot, you typically have enough equity to cover that. Although you did have to put up upfront costs because you either purchased it in cash or you had a land deal or something, some kind of acquisition. But 9 times out of 10, there's always enough equity in there to find out those closing costs can be covered. So in a way, you do feel like you're getting free money and that everything is covered, although those are charges in there, but they're coming to closing with nothing down. And that just makes them happy. And that makes us happy because we're feeling comfortable about this deal. The equity's there, and that's my favorite deal to do.
I love it. All right.
Yeah.
So what deals should I be bringing you that you feel that, maybe it's that one, but what you feel is like a layup and you're like, hey, look, man, if you come to the table with this,
Right.
this, let's get this done all day long.
Absolutely. I think an easy layup would definitely be the second house this borrower's flipped. They've already gone through that first one. They've had the growing pains of doing it. Fantastic on our end. They, really 700 and above FICO is all you need to get it done. That is a fantastic thing. There's no second looks on our end. You can have a 640 and above, but we're going to deep dive a little bit more. 700 and up is a fantastic borrower in my opinion. And really, it's the fix and flips that make the world go round in our world. So anything that's got a solid house that can have a 50K or above rehab, those are going to be fantastic deals. And not to say you're always going to get these refinances. Typically you don't, and you only have 4 or 5 in a month, but those are, everyone's happy. It's a win-win for everyone. So those are my favorite deals, but keep bringing the fix and flips. That's what I love doing. So,
yeah. Well, I just want to say thank you for joining me on this today. I know it was like kind of last minute, but I appreciate everything that you do. I think you're an extremely hard worker. What I appreciate about you is, I have access to like 300 lenders, right? And even even this week, some of the deals came in, there's some issues happening and they're like, all right, we can't do this. And it's like, whoa, wait, how? It's not, we can't do it. It's how do we get it done? Like, what do they need that we can get this done? Oh, well, he needs, 3 trade lines, right? Or whatever they need, or they needed more money or whatever's happening. It's disheartful when people give up. And I think you're a fighter and I appreciate that because I want to figure out how do we get this deal done? Not that the deal can't be, and sometimes that may mean the deal can't be done now. That's okay. Right. Yeah. But how do we put them in a position so that later on they can get this deal that they want or fulfill whatever they're trying to do? And I appreciate that. We fought. We were on the battleground together. So you are always my first choice, and we're gonna figure that out together. So I appreciate that.
Well, thanks to you. I mean, you're doing all the legwork. You're doing the hard stuff. You're making the conversations with the borrowers that are tough to have sometimes, and you're telling the good news too. but it's like you said at the beginning, we're in this together. It's sometimes you think it's borrower versus lender and they're trying to do stuff we don't want. We're all trying to get this deal done for the borrower. This is their business. This is our business. And the more we work together, the cleaner this file is going to go. So you make that happen, and you're caught in the middle sometimes, but I've enjoyed working with you. I've enjoyed all the deals we've done. But yeah, it's just problem solving at the end of the day.
Yeah.
It's problem solving and trying to figure out creative lending is what we call it. Creative lending. Sometimes you got to get a little bit more creative on some deals than others, but that's what makes it fun. No 2 days are the same.
So if anybody's listening to this, bring me more deals so we can get it done with Brett. Call it a day.
Absolutely. We can get it done fast. Yes, sir.
Yeah. All right. Thanks again for joining me. I appreciate it.
You got it, Michael. Have a good one.
All right. See ya.